A wild stock market session Tuesday, a Bitcoin breakout Wednesday, I quantify 2 trade opportunities in today's REKTelligence report. As a friendly reminder, everything in today's show is for informational purposes only. There is no investment advice given. All right, let's get into the show. Hey everybody, welcome. I'm Dave Bush. This is the EDGE report where I quantify specific opportunities in a variety of asset classes, just depending on what's going on in the markets right now. And today, I've got an edge in the stock market. I've got an edge in the crypto market. Let's get right into it. All right, let's start with the stock market. And I'm going to save my favorite edge to next, so stay tuned for that. We're going to start here with the daily chart of the SPY. So this week on Tuesday morning, amidst this new war, the market gapped down. You see SPY gapped down by at least 1.5%. Intraday, it sold off very sharply and hit a 40-day, at least 40-day low. And by the end of the day, snapped all the way back, or at least a good ways back, and closed solidly above its opening price, still down on the day, but well off the low. So what does this mean for action in the near term? How many times has this happened historically, and what should we expect? Let's get into that. So with a 5-day hold here, you see a pretty decent equity curve, and this is 1993 to the present, the inception of the SPY ETF. And the total P&L, 29.17% across all 27 instances. So that's an average trade here of 1.02%. Not earth-shattering, but definitely consistent and positive. The hit rate or profitability is 59.26% of the time, so it loses about 40% of the time, wins about 60% of the time, not quite. And profit factor is very solid at 1.8. That just means that profits outweigh losses by 1.8x or 1.8 times. So pretty good looking edge. What about 10 days? Often these edges improve with time. Let's take a look. Here's a 10-day hold in total P&L, 0.02%. This is just edgeless. This has no edge at all here. Sure, the average trade is slightly positive, but total P&L is slightly negative. How does that happen? That's based on path dependency, the order in which trades happen. Kind of a complex subject, so I'll skip it for now. But 10 days, there is no edge here based on this setup. What about 15 days? And it looks a little bit better if you kind of squint your eyes. I mean, total P&L here is 4.05%. But again, there's really no edge here. Hit rate is 66.6%, 2 out of 3. But nevertheless, it really doesn't amount to much. What if we go out a month? And by the way, of course, you can argue, hey, what does this 1 day's action really have to do with a month later? Possibly nothing, but possibly if the setup is dramatic enough, you could argue it does. Here we see it is positive, 14.68%. That is the total P&L across all 22 instances here. Average trade is just north of 1%. It's a very jagged equity curve. Hit rate does improve out to 30 days, 68% of the time it's profitable. And profit factor itself, though, is nothing to write home about, 1.18. So call it 1.2. 1 is break even. A profit factor above 1 means there is profit, but 1.2, really nothing to get that excited about. So let's look at all of these together. Average return divided by drawdown ratio, 0.06. That number in itself doesn't mean a lot, but in comparison to the other hold times, that's why I have this number. And it is the highest among all of these other metrics. That means that based on that metric, average return divided by drawdown, historically, that hold time, 5 days, delivers the most return per unit of risk of all of these hold times, right? So that's one way of looking at the quality of a trade, is the most return per unit of risk. Now let's look at the last metric, RRTR. This is the rate of return time ratio, and this also is the best of the whole bunch. This means it's the most capital efficient. Capital turns over most quickly with this setup compared to the others. So often these two metrics find two different trades, one that is more geared towards the active trader, most efficient turnover, and one, the average return divided by drawdown, that's more how much return per unit of risk can we get out of the trade, which optimizes that. And they're two different hold times. Here, they're the same, 5 days. So obviously, that is the preferred trade here if I were going to trade it. Now, am I going to trade this? It doesn't thrill me, right? A percent over 5 days. To me, this is more informational. This is more, oh, okay, I see. Historically, we should probably, on average, expect a little bit of upside over the next 5 days after one of these volatile gap down, snap back type setups that we've defined here today, but not too enticing as a trade. The next one is a bit different, so let's get to that right now. Time for crypto. And a far more compelling edge. I'm pretty confident you'll agree. Let's get right to it. So as I record this on Wednesday, Bitcoin is up north of 5% on the day. In fact, when I grab this daily chart image you see on screen, Bitcoin was up 7.29% at the time. I just checked about 5 minutes ago, and Bitcoin was up 7.8% on the day. So it looks like a fairly sure thing. It's not a 100% sure thing, but a fairly sure thing that Bitcoin will close with at least a 5% gain on the day and at least a 20-day high. That is what I'm defining. Anytime that's happened historically for Bitcoin, what has happened going forward. All right, we're about to look at several exit styles for this Bitcoin setup. Before I get to that, though, I want to talk about something you'll see in the next few slides, which is the REKTelligence Score. So what is it? It's an objective function. What's that? It's a single score that looks at a lot of different dimensions of a trade or metrics and combines them all into a weighted formula that is designed to save time by quickly assessing what's the superior trade. Now, traders can disagree on this, but I've tried to take a very balanced approach, and I'm not going to go into the weightings today. I'll do that at another time. But basically, strategies with fewer than 20 trades historically get a 0 score. If there is a REKTelligence score with a star after it or an asterisk, this means that results have passed a formal statistical significance test. What does that mean? Well, without going into that whole definition and statistics and significance and degrees of freedom and all of that, I'll keep it simple. It means that I want to make sure that anything I'm considering risking real money on, which is the whole point, is not noise. It's not just a pretty back test, because we can all create pretty back tests with a little code, a little effort, and yet a lot of people don't have the understanding that just because it looks nice historically, it may not be significant. It may be actually closer to noise than signal. I want to eliminate the chance that it is random noise, and I want to increase the probability that it is powerful, real information or signal. So that is the statistical significance aspect of this score. So some of the dimensions here quickly are profitability. Is the gross profit meaningfully larger than the gross loss? Win rate or hit rate. How often does the strategy close positively on a trade? Edge quality. How big are the average wins relative to typical losses? Return efficiency. How much does the strategy earn per day in a trade? And drawdown risk. How severe was the worst peak to trough loss in history? Scores without an asterisk are not necessarily 0, because if they have at least 20 trades, they do get a score. But if they have 30 trades and are significant, because not all histories with 30 plus trades are going to be statistically significant. They may still be noise, but those that have 30 trades and pass a statistical significance test, they get that star on the score. All right, so a lot of information in there, but let's keep it simple and just compare these R scores as we go forward. All right, so here we've got Bitcoin gains at least 5% in the day, closes at least a 20-day high. And you can see with a 15-day hold from 2014 to the present, that's the time period I'm looking at. I eliminated those very volatile first few years, and 2013 is such an outlier year, I removed that. So again, 2014 to the present, total P&L here across 56 trades or instances is almost 3,000%, which is amazing, very Bitcoin. And the hit rate is 75%, 42 out of 56 historically have been positive. Profit factor 2.173, that means sum of gross gains over twice the sum of gross losses. That's very good. Average trade here is 6.21%. Now, I can go through more metrics, but we're going to compare at the end, so I'll keep going. Here's a 30-day hold, And you see same setup, just a longer hold time. Total P&L, very robust still. Average trade 12.28%, 54 instances. Hit rate drops to 59.26%, and profit factor dips a little bit to 1.9. Equity curve not quite as smooth, but there you go. Let's move out to 60 days. And we see total P&L is dropping. 41 instances now, because you have a longer hold time, there's fewer chances for a new trade, so that's why there are fewer instances. Drawdown is much steeper here. Hit rate is just north of 56%, but not by much. Profit factor dips once again with a 60-day hold. So the 30-day, or I think it was a 15-day hold, was the most compelling so far, but again, we'll compare at the end. What about forget time holds, right? They're very good for just getting a baseline. That's why I do them. But what if we use a more sophisticated exit here? So same setup, but now the exit is triggered by the 2 MA, simple moving average, the 2 SMA closing below the 5 SMA. Pretty simple technical exit. We've got 2,200% across 63 instances, and we see average trade 6.34%. Hit rate is not amazing, 53.97%, call it 54%-ish. Profit factor, though, 3.126. Very nice. 3 times the amount of profit versus loss with this more sophisticated exit, and still, of course, quite simple. Let's look at a variation. The 9 SMA closes below the 18 SMA. So same idea, moving average cross under, but here are the results. Total P&L now, very robust, 4,700, basically 4,800%, essentially. 45 instances, 64.44% positive. Profit factor, 3.3, excellent. Average trade, 12.69%. Let's look at, I believe I just got one more here, the chandelier exit. I don't have time to go into the chandelier itself, but this is something I will do in some workshops to come, so stay tuned. And we see total P&L over 4,100%, 49 instances, profitability 63.27%, and profit factor 2.988, and the average trade 12.86%. Let's look at a summary because it's too much to take in with all the slides. So here we've got all of the exits, the 15-day, 30-day, 60, and then the 2 moving average cross unders, the 2 closing below the 5, and the 9 SMA closing below the 18 SMA. And lastly, the chandelier, which is essentially a ratcheting up, not of actual stops, although you could do that with it, but it's an indicator that acts like a trailing stop and incorporates average to range and volatility. So average trade for the 15-day exit, 6.21, 30-day exit, 12.28, 60-day exit, 15.48%. I think that's the best among the lot. Exit 2 MA below 5 MA, 6.34%. The next 9 below 18 is 12.69%, and then we have 12.86% for the chandelier. Now, we could go through all these metrics, but I really want to go down to the bottom 3 rows here. So average return by drawdown. The best metric here for that particular measure, or I should say the best result, is the chandelier, 0.301. The number itself, 0.301, is not that meaningful. What's meaningful is that it's the highest out of all of them. This means that this historically has delivered the most return per unit of risk, the chandelier, based on the current setup. What about the RRTR? This is an efficiency metric. And once again, the chandelier beats all of them easily here with a score of 1.005. That is not quite double the next closest one, but it's definitely far apart and puts it at the top of the heap. This means this is the most capital efficient for the active trader. Those looking to turn over their capital, but also have a quality trade. This is the best score in that department. In terms of REKTelligence score, this also is 72.7 with the asterisk. So this is statistically significant. In fact, all of these results are, but this is the best score. Next closest was that 30-day just time exit with 70.9%. Remember, this factors in a lot of different dimensions or metrics. So not that excited about the SPY edge we talked about earlier. That is informational. It tells me about the market and what to expect in the short term. But this, however, with the chandelier, This is more compelling. And if I was going to take a trade, it would be with the chandelier style exit with this edge. All right, everyone, thanks for watching. Today, I quantified two specific setups based on current market action, the SPY in the stock market section. Of course, we just finished the Bitcoin. And as I've already said, the Bitcoin edge is pretty compelling. And the stats are there. We talked through them. Chandelier exit is superior, but even the 30-day exit was pretty attractive to me. But of course, every trader is different. Everyone makes their own decisions, and nothing here is investment advice. I will see you in my next report. That is out Monday. The All Markets report should be an interesting report based on everything that's happening in the world and, of course, in markets. Trade smart, stay healthy, be well, and I'll see you soon. Cheers from the Caribbean.